Hi, guys. Good morning. Welcome to the Morning Muffin Show.
Morning.
I know it's been a busy morning already. It's
Absolutely.
busy time of year. This weekend is no holds bar, parade of homes. Spring market is here. People are out in caravans looking at homes. It's
Truly.
crazy. Well, welcome again. Let me see. I do have your. This is a Finance Friday, but I didn't save your name in here for some reason. Okay. I might have typed over it when I put my handyman in here. Okay. Um, I'm typing. That's why my computer's bouncing. Here we go. Her name is right there. Of course, you can see her. But this is Finance Friday with Jafara or Gigi Tillis, and
Yep.
she is with Sun West Mortgage.
Yes. Or
Yes.
the Blue Man Group.
Or the Blue Man Group, according to her website, you guys.
I'll get that updated.
I was like, hey, update your profile this morning.
Yeah. I gotta send in a headshot. I haven't done them in forever, but on the way.
I had to poke you on it this
I love
morning.
it.
Well, today, you guys, we are talking. We're going to talk about how to make yourself and your family a priority as far as housing, but we switched it up because we had kind of a little dealio this past week where there was someone who had questions about interest rates, and I was like, interest rates are moving up,
Yeah.
and it's always something that's kind of like floating and nobody really truly understands it. So I thought, I called you up, and I called you up because of the problem, and then we were like, yeah, let's do this, and you're like, yeah.
Yeah, it's an important topic. I think that it's almost like the last thing you talk about,
Mm-hmm.
So you
Mm-hmm.
talk about savings, you talk about credit, you talk about the type of house you want, how many bedrooms, how many bathrooms, and interest rates. It's always lingering, right? You see it everywhere. It's how people advertise interest rate and APR, but no one ever really talks about like how it affects your mortgage, how it affects your monthly payment, the benefits to things like buying down your rate or the ability to be able to do such things.
Mm-hmm. And the cost of locking in a rate,
Yeah,
which
absolutely.
I like, people that's never explained to people. And okay, so what is an interest rate?
So there's an interest rate and then there's an APR. And the interest rate is the rate or the interest that will be charged on the life of the loan. And then the APR is the annual percentage rate. So that's basically, usually the APR is a little higher, and that's basically how it's calculated yearly. So
Yeah. And my understanding is every bank has different procedures, different interest rates, that there's so many moving parts. Okay. There's when is the closing date, right?
Yeah.
There's what type of mortgage it is, what's your credit score.
Yeah.
And all those things are variables, and the interest rate you don't actually get until you like lock in.
And you sometimes can lock it in like while you're shopping. That cost you as a buyer a little bit more. So it's like, but for instance, if someone was going to build a home, they would want to lock their rate in right when they figured out where they were, like right at their pre-approval, pretty much. And they have the ability to do that. And so they lock it and they hold that rate, and it's usually for like 6 months. And usually a home can be built within 6 months when you find a builder and things like that. So we can get that rate locked in, and it's an extended lock. But there is something that you can do most times as a first-time home buyer, you're not really savvy enough to know this. That's why research is super important, or just asking your lender, your realtor questions, and just being super frank around what you need to understand and know. Candid conversations are really good, but you can lock your rate prior to finding a home. Again, it just costs. So I try and kind of lock rates in at the 30-day period, because that's usually where that's where you usually get the best rate for your process.
Mm-hmm. Yeah, so, because
go ahead.
45 days costs a little bit more, 15 days, you know, like the longer you go, the little more it costs. And if you have to extend that beyond your lock, you have to pay for a rate extension, which then costs money as well.
Yeah. So depending on the bank, sometimes they can charge like 0.15% of the total cost. So it depends on the bank and how they charge for rate lock extensions. That's what it's called, is a rate lock extension. So it's once you're, and that has to be approved. So it's either on the bank for not closing on time, or it's on the seller, or sometimes people have to come to kind of like negotiate on who's going to pay for the rate lock extension, on whose issue it is, on whether or not, you know, the loan closed on time. That's the only time I've really ran into, like, if there's a probate issue or something like that. Like if a home's in probate, you don't find out until you get to title. Clearly, we're not closing in 30 days. We had you set up to close in 30 days. We had your rate locked for 30 days, and now we're not closing for 60 days. So we need to extend the rate that you've locked in. There's options around that. So you can either return to float or return back to where the rates are, you know, hovering at that time. And you can either go with a lower rate, or, but that can cost too. Or you could go with the rate of the day. So when you lock your rate in for that day, it's something called like a rate sheet. So you could either, like, day of closing, or not day of closing, sorry, like prior to closing, you could say, you know, the rate sheet says that if I paid, you know, whatever it may be, $500, which would be a percentage of the loan, I can buy my rate down on that day. I feel like I have enough money to cover that now. I want to actually have a lower rate, which would make your payment lower. So, or I need a little bit more cash to close. I'm going to go with a higher rate so that I could get something called a credit for interest rate chosen. That is when the lender will give you a little bit of credit for choosing a bit of a higher rate, and we can help you out with your closing costs, basically.
That's awesome. I love that, because nobody knows these things. This isn't like discussed, I feel, as like first-time home buyers, and even just finance in general. Like buying a house, there's so much ambiguity in our society and our education system, and this is so important that we have these conversations. Because I learned so much from you, because I don't do your job. So
I mean, we do two totally different jobs. And I think that a lot of times I love like how we can collaborate and talk about these things, because I think it's very important for us to kind of cross what we do, so our customers feel very confident in, you know, you being able to help answer questions, or me or us being able to bounce off of each other. But what we do is totally different. So
I know. I always tell people, I'm like, oh, that sounds like a money question. I think you should call so-and-so. And it always, you know, and sometimes it's a lawyer, sometimes it's an accountant. I will admit, I am not a finance expert. I'm not a mortgage expert. But I do houses. And I do inspections, I do the process, I do negotiations, I do, you know, all of that kind of stuff when it comes to the contract and the purchase agreement. So, I like, we had I spoke to our mutual client that we have right now, and I was like, can I share your story? Because it's a really good learning experience for me. And for first-time home buyers in general. So let me preface this by saying that when you are a first-time home buyer, it can be a very emotional and personal process.
Absolutely.
Intrusive, because they start going through all of your financial records and your job history and your taxes, and it for a person that's gone like maybe 40-45 years without having that experience.
Yep.
It does feel very invasive. So our mutual client had finally, I don't know if he had locked in his rate
So
yet.
we hadn't locked yet. Yeah, because it was a 60-day close. So, and then we were waiting on some, the appraisal and things like that. And those are other things that you can talk about. I think it's important to kind of help customers understand when, and a learning lesson for me too. I always try and work, of course, for the best interest of the customer, but just sometimes you just get on autopilot and just say like, let's do it here, but to say like, these are the best times that you should lock, or if you're comfortable with this, let's lock it in now, So yeah.
And times are changing. Right now, interest rates are like this.
Yep.
Like they change by the hours sometimes.
It's literally like, I just thought about it in my head the other day, like a brother and a sister. I have a boy and a girl, like on a teeter-totter, like playing, like who's gonna like balance it out, and it's not balancing. It's like going like this. So
it's, you guys, and they're still really low. It's just it feels scary, for somebody to be on that roller coaster for the first time in their lives, watching interest rates and things like that. So
I would say that it is an excellent time to buy because rates are low compared to like 3 years ago, 4 years ago, even 2 years ago, when the average rate was like, with decent credit or okay credit, a 3.8 or 3.75 or even a 4.
Yeah, let me show you this chart. This is was it Fannie or Freddie? It's a historical rate chart, you guys. Here we go, right here. See, 2020, was low. Look, it's been going down. Like I bought my first property here. I'm going to say like right here, and it was high. And, it's amazing. And this is, you can't even, if you were to get an average of this, or even just like a 20-year average or a 10-year average, I mean, interest rates are still like at 5% would be an average for the last 10 years.
I have people right now that have had their house for 12 years and they're sitting at a 5.25. 5.50, and it's like, they have a lot of equity in their home or, whatever. And it's like, what do you do with it? Do you sell and buy and get your money? Or, there's so many questions that are out there. But from all the experts or all the gurus, they're saying it's an amazing time to buy. And it is because the rates are so low. And if you're locking in on a 30-year mortgage, or maybe it's an opportunity to take a 15-year mortgage, and you can pay your house off faster if it's something that you're planning on staying in. So if you would think maybe in 2015 or so, you would have gotten a rate of 5%, and now you can get a 2.5, and then you can shorten your mortgage, and take your mortgage and break it in half, and take a 30-year mortgage and make it a 15-year mortgage, or even a 20-year mortgage. Financially, it makes so much sense to be a first-time home buyer, or to be a move-up buyer, or a downsizing buyer right now.
Yeah, absolutely. And it's rates, they're always going to be moving. And the point is that so is rent. Rent is always going up. And I have yet to see any rent prices go back to where they were 10 years ago, unlike interest rates. So rates are like this, but rent is like a steady like this. So it just makes sense to put your money in the long.
Minnesota, I think we do not have a rent cap. So they can raise your rent every time you renew your lease. And so the beauty of purchasing is that your rent cannot be raised. Your taxes can go up, but your mortgage is fixed if that's the mortgage program you choose to go with.
Yep. I love this. I'm so glad that we talked. So going back to that case that we both have, he got scared because the interest rates went up a little bit, but also, there's different programs as well out there. So there's Minnesota Housing for down payment assistance. And there is, Fannie, Freddie, Annie, all other kinds of conventional products and whatnot. And so, when you look at a payment, it could change. Like it could make sense to change programs.
Yeah.
And
so, go ahead.
No, you talk about this because it was more.
So it actually, what we were able to do with this customer is actually put him on a down payment assistance program. We didn't go that route to start because the rates were actually lower just using the traditional FHA program. Then we decided to look at, if he could use down payment or assistance or not. It made more sense rate-wise. Initially, we had him paying a few points, and points are you pay a percentage of the purchase price to buy down your rate. And so we can get into that on another conversation, but it costs a little bit. So it's a percentage. So if you were to pay 1 point and your purchase price was $200,000, then you would be paying $2,000 in points to make your rate lower. So he was going to pay some points to buy his rate down somewhat. The points go into your closing cost. So we were able to get him a decent rate. And instead of him paying points, we're actually paying off some of his debt. So he's going to go into the home without a personal loan that he had. So that will help out. He won't have that debt on his credit anymore. And he'll have a pretty a similar rate to what we had chosen before, but he won't be paying any points for the rate. So, and this program will help him with his down payment. So he'll actually be bringing less cash to close. So that's a benefit.
See, this is why I love you. You're so creative. And this is also why it's great to buy a home. You guys can actually go into a home debt free.
Yeah, there you have it.
This is amazing. This is why people should work with people like you.
Thank you, Jen. I love working with you too. I love that video. I sat there and wanted to watch it again. I was like, this is so nice.
Oh yeah,
I would definitely choose that customer just for that. It was so warm.
I try to do little great things for my clients. If you guys want, these multiple offer situations get tricky. And so I just really try to do something that is creative, doesn't cost people money, doesn't go over the top with I obey fair housing rules and things like that. But it's just I really, really, really try to
it was such and you could see the effort. And I was just like, if I was like Simon Cowell, I'd be like, you got it. And that's kind of what it feels like out here in the market right now, is that you're on America's Got Talent or something.
Oh God, we pull out all this stuff. But anyways, thank you for that glowing recommendation. And I look forward to working with you. I have some news for you this morning. So if you want to stay on while I end this broadcast.
Absolutely.
All right, you guys, enjoy your weekend and we'll see you on Monday. Okay.
Thank you. Have a great weekend.
Bye. Oh, look, you got a comment.
Oh.
Catherine O'Malley, she's an amazing realtor.
Oh, nice.
Yeah. Okay.